some good news. Some good news this morning out of the Middle East. At least let's hope for good news here. Oil moves lower despite a falling dollar as Israel and Lebanon agree to a ceasefire deal. This is great news. Just from a human standpoint. Anytime you hear ceasefires or pauses on violence, etc., it is a positive thing, and we do see some major market moves in response to this. Guys, we've got stocks higher today. NASDAQ up almost 0.8%, actually gapped higher and continuing here this morning off of this news. So stocks loving this. Of course, peace in the Middle East to any capacity is an improvement, and that improvement is a positive thing for stocks because, of course, war and uncertainty makes the potential for oil prices to go higher, inflationary troubles, of course, just people just don't like the uncertainty of that sort of situation. And there you go. You got oil down 2.3%, gold dropping like a rock here, guys, down to 26.41 here. And, gold selling off on a good thing, right? This is how this kind of goes. Gold, oil moving lower here today because good news in terms of geopolitical conflict is not necessarily good news for gold. Gold typically thrives on uncertainty and global, escalations and things like that. So we actually see gold down big today off of this good news. And again, that is the risk on assets moving higher here today, and then gold and oil, which are negatively impacted by less war, moving lower. So arguably moving lower on a good thing. So back to gold here. Again, big drop for gold today. I remain really neutral on gold myself, but today, with geopolitical conflict and elections potentially being put behind us, I mean, this is too early to call, but if peace negotiations go well, that's a bearish thing for gold, because gold thrives on uncertainty. The elections had a decisive winner. That is a bearish thing for gold. Gold would have drove higher if there was geopolitical uncertainty, right? Now, there are still reasons to be bullish on gold, and I always mention on my channel that on the long-term basis, I am a perma-bull on gold. They print more money all the time in the U.S., it's a never-ending money printing, world, not just the U.S., but other central banks. Over time, fiat currency is losing value. I like gold more than I like dollars over the long term. But in the short term, gold looks a little rough, right? You've got a big sell-off here happening today, despite the big melt-up that we saw, right? Some concerns about Ukraine and Russia. Now we see a little bit of that uncertainty getting taken out of the price of gold, because you're getting potentially some peace negotiations happening in the Middle East. So to me, you combine that with a relatively robust U.S. economy, which is, of course, the largest and arguably most important economy of the world. We had PMIs on Friday, or Thursday, one of those days, which looked real good for the U.S. So you have relatively strong economic outlooks going forward. To me, that just means gold is not as interesting on the long side at this time. Now, I don't have a sell rating on gold right now on the Edge Finder. We're still getting a neutral reading, so I really don't have any trades. I don't love the price action either. This is not the same gold that we saw over here. If you're a regular stream viewer, we were very much watching the long side, staying long during this time. I missed this last bump, but most of this rally, I was able to catch a lot of the gold upside. And then I sort of got more neutral on gold. It continued to go on without me. And then now I remain neutral at where we currently sit. And in the grand scheme of things, we've actually just gone sideways for some time here. Back from the middle of September, we've actually gone sideways. We've had big moves up, big moves down, and sort of just netted to zero in terms of overall performance on the price of gold. So, if gold gives me a huge move lower, then yes, I will start to buy some for the long term. But that's not, a momentum trade that I'm able to take right now. There's nothing for me on gold at this time. I know a lot of traders who watch my streams are big gold traders and S&P traders and NASDAQ traders. I know everybody's got their thing that they watch. But for me, with gold at this moment, Just going to stay kind of sidelined on it, stay cautious on it. If it takes out the highs and we have geopolitical conflict, something new comes up, right? Then yeah, perhaps there's some momentum and I want to play that momentum. But at current levels, there's nothing for me to do. If price really corrects, guys, then yes, you might see more mean reversion value play entries from me. But where we currently sit, not really interested. Same thing with silver. Silver dropping off a cliff here, down 3% today, trading around $30.42. Silver is one that I would love to own silver for the long term. If it does start to sell off, I may look to play some long-term buys on it, but nothing where we currently sit. And currently, Edgefinder is giving us neutral reading for both silver and for gold. So current ratings, let's take a look at what we do have in terms of Edgefinder setups currently. S&P 500 is flirting with a bullish reading, but not quite there. DAX also close to a bullish reading, Aussie Kiwi, but only 2 bullish ratings right now. CAD Swiss, Aussie Swiss, those are the only 2 that are currently giving us a bullish outlook on the Edgefinder. And for bearish setups, we've got Euro CAD, Pound CAD, Kiwi CAD, Euro Aussie, Kiwi Yen. So some currency pairs here really coming out in terms of setups.
Our Black Friday sale is almost over. This was our best year yet at A1 Trading. In 2024, we brought the incredible Chris Pulver in and gave you guys access to all of his trades and analysis through Pulver Alerts. We also introduced our newest market scanner, the Stock Box, whose AI algorithm is scanning each and every day to provide you with bullish or bearish biases on the top stocks and stock sectors from around the world. Not only that, but the Stock Box gives you a behind-the-scene look at what the largest hedge funds in the world are buying and selling through the 13F scanner, so you can keep up with what people like Warren Buffett or Steve Cohen are adding to their portfolio. The best part of all, both of these products are on sale now for a massive 40% off during our Black Friday sale event. The Stock Box, the Edgefinder, Pulver Alerts, and the VIP Discord community, as well as our trading view indicators, are all on sale for 40% off. Again, the sale is almost over. This is the absolute best discount of the year, hands down. So if you want to take your trading to the next level, don't miss out on the 40% off Black Friday sale event. You can find out more in the description below. Again, 40% won't last forever, so take advantage of this huge sale. Stock Box, Edgefinder, Pulver Alerts, VIP Discord community, and Trading View indicators, 40% off right now.
I built this net retail positioning, which takes the long percentage minus the short percentage. And you can actually see, look at this, retail has been building a long position, right? This is a daily snapshot that the Edgefinder captures and puts on this screen for you. So we've got retail sentiment getting more and more long. And what is price doing? Going more and more short. I happen to know that James, who is in the stream and a regular stream viewer, he knows I'm coming at him with this right now, because we know you use another product for this, but we made it better so that you use our product. That's we got to earn such a established traders business every day, it seems. But check this out. So we added a chart where you can actually see the price of Eurodollar over time, but you can also see the net positioning over time of this instrument in terms of a retail positioning. This second table down here shows you the long to short percentage rate over time. And you can actually see, this is interesting. So as price has been going down recently, retail traders are piling on longs on Eurodollar. And it's not going well because Eurodollar has been tanking. You can see in the price. But we find that interesting because with everybody on one side of the boat, everybody is trying to buy this dip and the dip keeps dipping. Momentum traders out there, like James, who I know is DCAing into Eurodollar shorts, has been making some great money just riding that downward trend. And it's based on data, right? So this new retail sentiment, I'm really excited for this new tool. This is something that we've had a lot of people requesting for this tool, and we finally got it ready and built for members. Bitcoin moving lower here today. A little bit of a sentiment play here, though. This is tricky because everybody thinks it's going to 100K. Me too. I think it's probably going to go test 100K. But you may get a little bit of a sell-off before then. Frank and I are speculating that a lot of people might have their orders to sell Bitcoin right around the 99.5, 99,000 level. And what this might be doing is that, and I hate to sound like a Wall Street Bets Redditor, but it might be the paper hands getting taken out, right? The weak hands. These are whether you're a Redditor, whether you're these things have gone on for 1,000 years, right? The trading psychology stuff. The weak hands, quote unquote, paper hands, whatever you want to call them, people are just the easier people to take out are taking their profits, they're getting out of the way. And then people who truly hold may see, and again, this is not a guarantee, there's never a guarantee in markets, but I think there's a high probability you're going to get some weakness that gets taken out here this morning. And then I think we could still see 100K on Bitcoin. Now, I'm saying that, I think that. I'm just some random idiot on the YouTube or Twitter that you're watching. I could be totally wrong. None of this is financial advice. Do your own thing. Bitcoin could have just topped for the next 5 years. Who knows? But for me as a momentum trader, I don't know where markets are going with certainty, and I never claim to know. What I like to do is use market structure to tell me when it's time to get out of a position. So I went long Bitcoin around $70,000, and I have a stop loss that is below this 92,500 level. If that level cannot hold and we start breaking through there, I'm going to go ahead and call it good on my Bitcoin play. It's been a really, really good position for me, but I'm willing to give back those profits if the market, chooses to truly reverse. That being said, if this market kind of finds a higher low and keeps going higher, the reason I'm not taking profits is because I want to trail that stop. I want to, if we get a higher low, I want to be able to continue to stay in this play because I don't know how far Bitcoin goes. It could go to 120,000. It could go to 200,000. It could also go to zero. I don't know, and I don't need to know in order to make money, right? What I think a lot of traders look for in social media is they look for somebody who claims they do know, and that's why that stuff sells really well. But the reality is great traders don't have to know what markets are going to do next to make money. You just position size appropriately. You trail stops or you manage your position. Some of you guys might like taking partial profits. But the bigger thing, there's only one thing that you can really, truly control in the financial markets. You ready for it? It's your own personal position sizing. That's the only thing you can control about your trading activity. Of course, there's also, you got to manage your trading psychology, etc. But in terms of actual P&L movements, the only thing you can actually control in financial markets with certainty is your position sizing. How much money do you put at risk? That's what you can control. Yeah, and in terms of what you just said about the fundamentals, you have the dollar index still looking good, but I wanted to draw this chart to show this to everybody too. What I've been just saying here is you can still have, even in a very strong upward trend, a very healthy pullback, and that pullback for the dollar index could go far, far, far down in terms of a percentage basis. Maybe 104, 105 is perfectly reasonable to see prices go to and still be in a relative strong upward trend. So, with when we talk about charts that are moving in kind of one direction, you do have to be careful about chasing this kind of idea. It definitely could continue, but your risk to reward starts looking a little less attractive in my view, as opposed to if you can get that pullback, if you can get a discount in terms of dollar, there may be some better opportunities risk to reward basis wise. You might miss the move if it just keeps ripping. Yeah, you might miss it, but I'd rather miss moves and only take ones that truly have better potential in terms of a risk to reward basis. Speaking of moves, if you had any dollar ideas, Ivan, which charts would you be looking at? Euro, pound, Kiwi? Are you looking at any of them?
We had a little bit of a fun story earlier in the meeting, and I said that, okay, so let's say that your dollar's going to go higher then, and I didn't say that, but I'll probably take your dollar. How far of a pullback will you get before it turns bullish? And this is different levels. So my fair answer, or my slow answer, is your dollar. And the reasoning is euro strengthens the most when dollar is weak, if dollar is supposed to be weakening, but in itself euro is weak. Other assets also the same thing. So in that essence, probably the euro dollar. The other one is Australian dollar, New Zealand dollar, which has gone into a range. So I don't really like it. So, but it still has like a higher low sort of tried situation. But anyways, yeah.
Yeah, no, I mean, the Australian dollar has been getting absolutely beaten up against the US. I mean, most currencies have been. The question will now be whether or not you can start to see some actual breakouts, which could lead to, short term, like we're talking about, short term, bigger pullbacks on the dollar index during this period of time. That could be a month long trading environment, right? So if it takes its time here, there's 30 days. You've got the holidays here for the US mixed in there. It's very possible that you could still have a strong dollar trend continue, but get a few weeks of short-term bearishness. Again, that's not really something that I personally like to play or that I'm actually looking for. But I think it's completely reasonable to see something like that in the meantime, and then still look for opportunities on the long side if the fundamentals still make sense at the time.
Okay, I agree. I can agree with you. I'm just looking at dollar yen, and I don't know why I have made this chart, and I'm trying to find in my brain why I made this chart. But I seem to be quite somehow right about it. And I bet I haven't made this as this happened. It has to be like last week, like Monday or so. So I think I made this chart about here, and this is going to happen afterwards. So maybe if yen is strongest today, seems like maybe that's the best dollar yen play. But Craxer, how old is Nick? He's a baby.
I'm 16. 16 months.
Barely legal.
Yeah, no, I mean, if we take a look at the yen, dollar yen, pound yen, euro yen, all seeing a little bit of give back here in the last few weeks. But the question is too with the Japanese yen, we always come back to it, is like, what's the global situation in terms of global outlook? You saw a little bit of PMIs out of Europe come in weak. So euro yen, especially here, pound yen, these ones, I mean, the UK also had weak retail sales. So pound yen taking on a little bit of water here against Japanese yen. But the bigger question is, what does the macro situation globally look like? Because that's the thing about the Japanese yen. The Japanese yen is very much sensitive to the whole world's economy because of its role as the piggy bank, if you will, for a lot of hedge funds and borrowers, right? So what a lot of funds do, it's known as the carry trade, is a lot of funds will go borrow, aka sell Japanese yen in order to fund their ventures in other places, whether that be stocks, whether that be bonds, whether it be other currencies. And by the way, if you need to go buy, if you want to, let's say you're a hedge fund and you want to make a return. So what you do is you say, I need to borrow money. Well, the Japanese yen is going to cost me very little money to borrow that money. So I go sell that. And with the money I borrow from the Bank of Japan, what do I go do? Well, let's say I go over to let's say I want to buy bonds. Let's just say I want to buy US bonds. And here's a scenario. You want to buy US bonds? Okay, what do you buy US bonds in? US dollars. So you actually need US dollars, and then you can go buy US bonds or stocks or whatever. But the point is, where did this come from? Well, it said we need to sell Japanese yen, buy dollar, and that's the scenario. But the caveat here is that whole trade reverses course if things get ugly in the world. So what happens is, instead, if things are ugly, you own bonds and you say, oh, I need to get cash because I don't know what's coming next. And so the trade reverses and everybody goes long yen. So that's why it's global, because you could also do this for UK bonds. You could buy German bonds. You could buy German stocks. You could buy UK stocks. You basically, it's the world's piggy bank is the Japanese yen. And that is why we always keep an eye on the global situation if you're going to try and value the Japanese yen. So inherently tricky, but the pound yen, euro yen dropping here recently makes a lot of sense with the recent weak PMI data out of Europe.
But does the strengthening at the moment make sense?
Wait, sorry, say that again.
Does the strengthening of the Japanese at the moment, given the ceasefire, but that's the driver at the moment. But why is then yen becoming stronger at the moment, as we can see here, rising a bit, and dollar did kind of fall, but it's kind of trying to make a pullback.
Yeah, no,
shouldn't it weaken the yen?
That's a good point. It could be a little bit of spillover from last week's trading, but also we see stocks reversing course here this morning. So a bit of a risk-off sentiment flip. You got NASDAQ here, what was up 1%, now only up 0.2%. S&P 500 also looking similar. So you're seeing a little bit of a risk-off flow here, at least in the opening bell of the U.S. stock exchange. Same thing with dollar. Dollar sold off. It is now rebounding a little bit. And Japanese yen sort of reversing course as well. So interestingly, we also see bonds still remain elevated. So not exactly sure what that's. Well, oil, let's see what oil's done. Oil's still down. Gold is still down. Bit of a weird day, Ivan. That seems a little contradictory.
I did say that for a reason.
What you got for us?
Yeah, I got something for you. Also, my brain, with the only thing that can kind of make it make sense is the fact that that's not a story that drives yen at the moment. It's not necessarily the greatest story for yen, and there is bigger fishes to take or catch, which is the interest rate expectations or differences. It's the election, well, still election kind of days, that we call it in English, days, like the spillover from the election and other reasons. Why would yen strengthen today because of that? It might be because people have, I don't know, for some reason taken their money outside of Japan and then bring them back home. I was just looking into their what do you call them in English? Their statistics, and they're still with inflation at 2.3, but it's less than last time, and their growth is 0.3. So lack of growth, but still has inflation above 2% target. So it's kind of like, I don't know, zero growth or a lack of growth, but still has inflation. So when are they actually going to increase interest rates? Maybe this lack of a war now brings the interest rate expectations rate hike back into Japan.
So currently in a very, very good month. So you can see here we're up almost 5% with some trades currently open, which I'll go through in a second. So yeah, not looking too bad. We're up almost 10% in the first sort of 3 months of this portfolio being alive, which, yeah, quite impressive if I do say so myself. So I've just entered into Euro CAD short, and I'm going to tell you why in a minute. But first, I want to see if any of you can tell me why I might be short on Euro CAD. And while I do that, I'll show you some of the other positions. So I took a gold long this morning, closed out right before the drop because I coded the algo. I know exactly what's going to happen at all times. Obviously, it definitely wasn't just a great exit. So this was about 0.5% gain this morning, which was quite nice. Obviously, short EuroCAD here, got some DCA positions open. And most importantly, still DCAing euro dollar to the short side. So you can see here, I've currently got about 1.5 lots on, which is not too bad in terms of risk or exposure. Just really looking for a fill of this gap. Nothing too crazy on this one. So if I turn on my trade history, you can see I've been DCAing euro dollar for quite some time now. And this is possibly my final attempt until further notice. And then I'll go over euro dollar as well in a second. So as for euro CAD, it's pretty obvious to anyone that has the edge finder why I'm short, and that's because it's currently the most bearish reading. You can see here it's got a score of 7. The data is very supportive. We've got COT short, we've got retail traders very long, actually 76% long on Euro CAD, which is a nice sign. You know, we like to counter trade the idiots. So yeah, that's essentially it. Obviously entered off our fib zone. This is the way that I tell you guys I trade almost all the time. So it's a very straightforward sort of bread and butter position. Do you use an algo for your trades? Nope. I don't trust my money with anyone but me. Hi, James. Please touch on why the market opened with a gap. It just did. It's just one of those things. So with gaps in the FX markets, it's not very uncommon, or it is quite common, that you'll have market gaps and market opens. The problem is, well, not the problem, that's probably the wrong word. The thing is, you'll see this very similar thing with stocks. Now, I don't trade stocks very much, if at all, really. But what I've noticed with stocks is gaps can stay open for long periods of time, weeks, maybe even months. Whereas with FX, you often see these gaps get filled relatively quickly. It could be within a couple of minutes, could be within a couple of hours, or even a couple of days, but they do generally get filled. I actually challenge you to go back in the FX markets and find a gap that hasn't been filled. So that's one of the contributors to going short on euro dollar. But as for why the gap happened, wouldn't overthink it really. It's just one of those things. So let's see. The dollar currently, well, briefly broke above 107. It's not managed to hold, which is a little bit disappointing, to be quite honest. But there you go. It's not a surprise that we are seeing some sellers in this market, possibly just profit taking and sort of a natural market pullback before we continue higher. What indicator do you use? The indicators I see on your screen are great, especially the gold one. Yeah, so the one on TradingView is basically just a bad version of this one on MetaTrader. It's a custom coded one. It's my own. But it's just pivot points, which are these red lines and the green lines. This oscillator at the bottom is just a momentum oscillator. It's very similar to an RSI or, you know, stochastics, whatever. And I also get these entry signals as well based on my own entry criteria. So yeah, the one you see on here is exactly the same thing. It's just a bit worse. I just basically recoded it for TradingView just so I could have the pivot points. Bro, can you check on GPCHF? Why is it falling? Sure. I'm not really sure why, to be honest. We can have a look though. It's not really falling, is it? Well, it's just falling, but it's not really a huge thing. So essentially we've got quite an impulsive move over here to the left. So again, similar to market gaps, you can kind of expect these moves to be corrected as well. I say this all the time about news moves. So you know, over here we had the same thing that was corrected. Over here hasn't fully been corrected either, actually. But yeah, I wouldn't really think it's anything hugely important as to why this is getting corrected. Oh, I'm also short Swiss yen. So if we zoom out here, this is the, well, essentially it's not my trade, really. This is piggybacking off Morgan Stanley. So they're in a, actually, let me get rid of my position. So this is Morgan Stanley's position here. You can see that where they executed is right here. It's exactly the same. So I've basically just followed. My interest a little bit lower, but there you go. What can you do? So that's that. I'm kind of anticipating the MOF intervention that should be coming quite soon. In theory, obviously, I don't really know for a fact, but it wouldn't be a surprise. Why is gold down? Gold is down because there's a bit of a relief with is it Israel and Lebanon, I think. It's sort of like a ceasefire talks, which is obviously driving some capital outflow from risk assets such as gold. Please check pound yen and euro pound for sure. Do you know M Stanley Trade _? No, Sean, I've never heard of him or her. So pound yen, let's have a look. So last week with the yen pairs, it's essentially stayed the same. So I did call a short on pound yen back up here. I didn't take it because it wasn't really in line with the way I actually trade, but it was on my watch list. The problem I've got with the yen pairs is the intervention. Now, I'm going to sound like a broken record to anyone that's been watches my segments often. I've been talking about this on repeat really recently. But what we've got with the yen, we had a strong appreciation after the intervention caused the unwinding of carry trades, flash crash. We had a temporarily hawkish BOJ, or Bank of Japan. And since then, nothing's really happened. And that was mainly driven by the Bank of Japan saying they're not in an environment to cut rates, or sorry, to hike rates. So since then, we just saw it sort of bleed out. It's just been on this move to the downside. Now, what we've seen is almost a full correction. We're almost back at the pre-intervention level from July. This was, July the 10th. So it wouldn't be a surprise that, if we do get another intervention, just to slow down the depreciation yet again. We've also had word from the MOF that they do need to intervene. It's not a secret, really. So I would heavily avoid going long on yen pairs at this moment. But of course, that's just my thoughts. You can do as you please. Do you know about Morgan Stanley trade? How do you know? Oh, how do I know? Okay, well, it's from bank reports. So I'll show you. I can't remember where the exact report was, but let me show you. So, for example, I get reports like this every day or every weekday. So Monday through Friday, I get about 10 to 20 reports from places like Bank of America, Morgan Stanley, Credit Agricole, etc., etc. And in those, they often list what positions they're in. So it makes it quite easy, really.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.